Greetings from our team, Robert and Jones Wealth Management. I'm Jack Jones, the managing partner. Wanted to share our thoughts with you on our January monthly market update. "2020, as we mentioned a couple of weeks ago, was a year of extremes, from quickest into and out of a bear market in history to a negative 30% contraction in the second quarter, followed by a positive 30% expansion in the third. Unemployment that resulted in over 20 million jobs lost, followed by only a half of that gained back, negative 36 WTI, and then election risks in the back half of the year that concluded with a negative October and then a very positive November and end of the year. So 2020 was one that was really marked by extremes. One of the things that speaks to that is this is a look at the COVID crash compared to other market declines. You'll see, again, similar drops to others, but one of the things you'll notice is how quickly it was over. Again, the quickest into and out of a bear market in history. Many of you have gotten used to using Zoom as we have over the last few months. As of December 2019, you had only 10 million average daily users from Zoom. By April, that had gone to 300 million. And you now have a market cap of Zoom at just under 50 billion. That exceeds all of the airlines combined. So if 2020 had a slide and a data point, this may very well be it as it relates to Zoom. And not surprising, 2020 was a very volatile year. You saw over 44 days where markets traded in excess of either positive or minus 2%, compared to only 7 days in 2019. So let us wish you all a very happy new year. And I know many are looking forward to turning the page on 2020 that was so difficult for many into a new year in 2021. The headlines around elections and the violence at the Capitol last week remain volatile. Although interestingly, last week, both the elections on Tuesday and the terrible violence on Wednesday, followed by a bad jobs report on Friday that we'll talk about in a second, markets have largely shrugged those events off. There's lots of different explanations for that, but one is that the markets tend to look forward. And I know that we're looking forward to an environment where markets can focus more on fundamental things in 2021 than in the headline things that have really dominated market events since March of 2020. A couple of things to think about as it relates to elections are that now the Democrats will control the House, Senate, and the White House. Well, how common or uncommon is that? Well, over the last 30 years, if we go back to Clinton's first term that began in '93, 4 of the last 5 presidents have actually had the House and the Senate along with the presidency. So it's not that uncommon. In fact, of the last 5 presidents, only George W. Bush had a divided Congress when he was elected. So again, it's not that uncommon. In fact, what's uncommon is divided government at the beginning of a presidency. So I mentioned Jobs Friday. There were 140,000 jobs lost in December. The unemployment rate remained at 6.7, but that's sort of a misleading number because the same number of people were looking for work. Now, as we're looking pre-COVID, you'd be looking at a 9% unemployment rate. So that remains a challenge for so many in our country. One of the things you saw last year, and this is not surprising in any election year, much less last, is a record amount of money that is being held in money market accounts. As of the end of September, you saw 4.4 trillion being held in money market accounts. That is being held at a very low rate of interest, even though rates have gone up a little bit. You were still looking at the 10-year trading at 1.15 interest roughly. So that money is getting almost no yield, which means as it relates to 2021 and things to kind of focus on and be optimistic about is hopefully there are less, election-based things and COVID-related things that the markets can return to a focus more on fundamental things as opposed to those headline events. And also those record amounts of money that are in cash and money market accounts are likely to be redeployed either in risk assets, where the risk return comparison is more favorable, and or possibly pent up demand, and that could aid the economy in expansion in 2021. So hopefully we try to keep that brief, and hopefully that gives you some summary thoughts as to how we're viewing the economy and financial markets in January of 2021. Again, we wish all of you a very safe and happy new year. We always say that we don't know what to expect in 2021. We obviously didn't know what to expect in 2020. But as things change, we will adapt, and we'll contact you, and we'll let you know what's going on. And please reach out to us if you have any questions at all. Until then, we hope you all stay well and take care.